Hello Wolfpack. Now I want to talk about something that's a little bit unique today. Unique in the sense that I haven't talked about it massively before, and unique in the sense because it's a little bit unique based on my opinion on Bitcoin. Now, briefly, I know people watch these videos all the time, right? You've seen my videos before. Just very, very briefly, what is my opinion on Bitcoin right now? My opinion on Bitcoin is we're in a macro bear market. My opinion on Bitcoin is in order to confirm that we're ending that bear market, we need to break above 28.6K, which would be breaking above the bottom structure for the entire bull market of last year and the year before. And I think that breaking above 23.8K would be a step in the right direction, but would not be enough to confirm we're back in a bull market. So yes, I'm macro bearish until we break 28.6K, and I'll be short-term bullish if we break 23.8K. That's essentially my opinion on Bitcoin. Brief kind of overview of what it is. But I want to talk about kind of the bullish prospects now, because what we're seeing right now is interesting. Now, the Bitcoin chart itself is terrible, right? I mean, there's no denying that. I mean, to a certain extent, it's terrible. It's not great. Let's just say that way, right? We've seen massive amount of candles with long wicks to the upside, just above resistance, rejecting back down, failing to close above 23.8K. And we had a bear flag formation. Yeah, we broke it to the upside, but now we're in the process of dropping back within it. Now, the one redeeming factor is that the 200-week SMA, this green line, is being held for support at this point in time. And so provided we don't drop below like 22.7K or 22.8K, we're still holding the 200-week SMA, and hence we still need to consider the fact that there still are short-term prospects to move to the upside. But once we lose that 200-week, and if we do lose the 200-week, that's going to be an indicator that it's all done in the short term for Bitcoin. And looking at the shorter term time frame, if we look at the 4-hourly chart for Bitcoin here, and we can see we actually had a double top formation, right? We had a double top formation, but again, testing that 200-week, we're holding it so far. And so right now, we need to consider a lot of probabilities. Well, the probability that I'm looking at and that I'm considering quite heavily right now is that we bounce. And why is that? Now, I don't necessarily think the Bitcoin chart itself is indicative of the bounce on Bitcoin. And I don't think any chart really is looking bullish at all. I think most of the charts right now are very bearish. But what I can say, and this is the topic of the video, the traditional markets are worrying me a little bit, right? They're worrying me a little bit in the sense, they're not worrying me, they're actually exciting me, I guess you could say. But since my macro view is bearish, yes, they're worrying me. Because we're coming up and we've seen a massive, massive rally on the traditional markets. And the S&P 500 is breaking to the upside here. Now, look, it's coming into resistance. Right, the resistance is, as per the volume profile you can see there on the screen, between 4,178 and 4,100 flats. And it is rejecting. It's seeing a preliminary reject from resistance, but it's not enough. We simply don't have enough data to see whether that's going to break down or hold support on 4,100 or what's going to happen. We just don't have the data yet. We need to be waiting and seeing. But the reason why I'm a little bit, less bearish than I was in previous days, it's not that I'm less bearish, it's more that I'm more cautious, I guess you could say, is because we're seeing massive relief on traditional markets, not only on the SPX, but also on the DXY, and also on the bond yields. And relating the bond yields back to interest rates, we're seeing that there is a chance that we're seeing some sort of deviation from the general recession trend here, which would be bullish for Bitcoin, right? So let's look into that. Now, the first thing is the DXY. Now, the DXY, if you don't know, is the US dollar currency index. It measures the strength of the US dollar in relation to certain assets and other currencies. And so when this thing goes down, generally speaking, Bitcoin goes up. And when this thing goes up, generally speaking, Bitcoin goes down. Now, it's in a massive upwards trend on a longer time frame. And so you could use the argument, oh yeah, zoom out, right? That's a fine argument to use. There's nothing against that argument. I completely agree with it to a certain extent. But what I can see is that we had this correction. We formed a descending wedge formation, and we actually broke the descending wedge formation to the downside, which is not typical of descending wedge formations, and it's also not typical of the DXY in a macro uptrend. Now, that said, we do have stochastic RSI bottoming out, and we do have a hidden bullish divergence on the RSI, and so there is an argument to be made that this is a fake out to the downside, right? But the fact still remains that the DXY is showing a massive amount of weakness, right? And why is that? Is that indicative of the fact that perhaps the recession is easing up a little bit? And is that why the S&P 500 is pumping? And if that is the case, is that why we're seeing relief on Bitcoin? And if that is the case, does that mean the bottom is in for Bitcoin? Right? So, the macro environment affects Bitcoin very directly. Now, Bitcoin and the traditional markets, for example, they are separate things, and they're both connected to the macro environment. It's like a pyramid. A lot of people get it wrong. They think that Bitcoin is connected to the S&P. It's like, no, that's not how it works. They're both connected to the same macro. And if the macro is getting better, for example, if inflation numbers are coming down, that is an indicator that the macro is getting better, because it's an indicator that interest rate hikes are working, right? That means both Bitcoin and the S&P will pump. And that could be what we're seeing here. Now, we don't know yet. And how don't we know? Why don't we know? Well, we don't know because the CPI numbers haven't come out yet. And this is why I'm putting a lot of emphasis here on the 10th of August, because on the 10th of August, we will be seeing the inflation rate for July. Now, the inflation rate generally, I mean, we can bring up the chart. Let me get it up here. The inflation rate has been rising rapidly in the USA, you know, the parabolic uptrend since May 2020, essentially. And so when this, let's just put it this way. When inflation tops out, it's typically an indicator that the market has bottomed out. Right? And if inflation has topped out in the month of July and we just haven't seen those results yet, which will be releasing on August 10th, that could explain why the market is pumping right now. It could explain it. And if we're looking at things like bond yields as well, bond yields are topping out. I wouldn't say they're topping out, but they're at least stagnating. Now, we've seen stagnation before. In fact, we saw stagnation in April to May and we still went upwards. But I think an important thing about the bond yields to consider is the fact that bond yields represent what the interest rates are going to do, right? So bond yields are basically the yield the Federal Reserve of the government kind of rewards people who buy bonds. And obviously, the higher the risk in the economic market, the higher they'll put the bond yields to incentivize new people to invest in bonds, right? So when this thing goes up, it represents macro risk being very, very high. When it goes down, it represents macro risk being very, very low. And this thing is correcting, meaning that macro risk in the view of the Federal Reserve of the government is becoming lower, right? And what we can see is that bond yields generally represent where interest rates are going to go. So bond yields right now are at the same level they were in November 2018, and interest rates are at the same level they were in November 2018, or around there at least. So, what we're kind of seeing right now, or they're not really actually, they're almost around there. So what we're kind of seeing right now from the market is that interest rates and bond yields are aligned. So interest rates are no longer dramatically under where they need to be as per the bond yields, right? So we've kind of reached the point we need to be with interest rates at this point. And if inflation is topped out, right, which we don't know yet, we'll know on August 10th, if inflation is topped out while this is the case, that is a very strong argument for the S&P 500 to start pumping, okay? And obviously, the S&P 500 will only pump if the macro environment is good, and if the macro environment is good, there's a high chance Bitcoin will pump. So this is where the situation is for traditional markets, and I think that's the most bullish argument you can make for the crypto market right now, and it's completely valid. Now, the problem with it is this. It doesn't rely on TA. It relies on speculation about the macro. And so it's a bit blind. It's a bit in the dark. Now, it has some TA elements to it. Obviously, we're comparing bond yields and interest rates, etc. But it still is a little bit in the dark. Now, if I have to go off charts alone, which I do because I'm a trader, I would say Bitcoin has to go down still. But obviously, the macro correlation has a lot more weight than a couple of lines on a chart to a certain extent. And so this is why it's very important right now. Now, regardless of what's happening, regardless of anything, I still will not be macro bullish on Bitcoin until the charts tell me to do so. And the charts will tell me to do so at 28.6k, short-term bullish at 23.8k, right? So 28.6k, who cares what the macro is? That's when I'm getting bullish on Bitcoin macro. Now, that doesn't mean I won't buy Bitcoin before then, but that's where I objectively say, okay, as per the TA, the bottom is in here, right? So, interesting times. That's the most bullish case you can make for Bitcoin and crypto and the traditional markets right now. And it's definitely worth keeping an eye on. And this bear market has been driven by the recession, and it would be logical to assume that it would end when the recession ends, or not even when the recession ends, because the recession goes past when the markets. Let's put it this way: the S&P 500 started correcting before the recession started. So the S&P before interest rates started hiking. So the S&P 500 predicted that was going to happen. And the S&P 500 will predict that it's going to bottom, and it's going to bottom before the recession does. So essentially, the S&P 500 acts like a few months in advance, right? And so it tops out before everything happens, and it bottoms out before everything ends. And so if that is the case, there is a chance that the recession might go on for a few more months, but the S&P 500 could actually bottom out before that. So yeah, I don't know. I don't know what to say. You know, it's very blind. It's very speculative, but it is very much worth considering, and that is the main argument against the bear market at this point. And I honestly do think it's very considerable. And sorry, I'm stuttering a lot. I do think that August 10th will be very important with those CPI numbers, and we really need to keep an eye on that. Very, very important stuff coming up, guys. And as a TA analyst, as someone to analyze charts, it is a little bit worrying because I don't like when the macro has too much of an effect on Bitcoin. You know, I'm a good TA, I'm good at charts, I'm good at doing triangles, all this stuff, you know, indicators, all this, obviously, because I'm an analyst. But, you know, I'm not an economist. So I can't perfectly predict what the macro situation is going to be. We have to wait for those numbers to come out, and then we can start to integrate that information into analysis. But regardless of all of this, we're still not changing our predictions because the charts, in my opinion, speak the truth, and speculation doesn't speak the truth. So let's see. Thanks for watching. Before we end the video, looking at a few things, like always, Wolves Crypto VIP. Okay, Wolves Crypto VIP, you can click on my YouTube channel homepage, click the join button, and you can see all of these perks that you'll gain access to: exclusive altcoin trading setups, prioritized reply to comments, a 2-hour lecture on market psychology, and exclusive Telegram access, all for $28 USD a month, less than $1 a day. A bargain. Get into that if you haven't already done so and become a VIP. We've also got the BitGet Exchange, which is the exchange we use in the VIP group chat, and the exchange everyone on the Wolves Crypto channel should be using. All of you should go ahead and sign up using my referral link in the description below to gain access to a reward center on this exchange. Not only that, but you're gaining access to an exchange that has half the fees of Binance, non-KYC, and USDT and USDC futures with no regulation based on government location or whatever your residency is. So you're accessing an exchange with limited regulation and maximum security to a certain extent. Right, so as much as exchanges can be secure, right? Great for trading. I personally use it daily, and I highly recommend you guys sign up using my referral link in the description or pinned comment below. It takes 5 minutes and it's free. Do it. And then to become a trader, the Crypto Academy course. So myself, my fellow analyst Mega Whale Crypto have created this company, the Crypto Academy. We created it earlier this year in Q1, and we released Become a Trader, a 10-unit course, which is a course teaching you how to analyze charts and teaching you how to trade. Now, this is everything from what is Bitcoin to the most advanced aspects of trading. You know, it teaches you how to use an exchange, market patterns, indicators, candlesticks, market psychology, mindsets, you know, certain types of trading styles, trading techniques, trading strategies, what indicators you should use, what moving averages you should use, where should you take profits, where should you enter, where should you... Everything you need to know about trading is in this course. Well, 90% of the things you need to know about trading, at least, are in this course. And if you're interested in that, go ahead and send us an email here at cryptoacademycourses@gmail.com, and we'll get back to you with a pamphlet and a video explaining what the course is and what it entails. Thanks for watching, guys. Hope you enjoyed the video. And without further ado, I'm going to end it there. I'll catch you in the next one. Cheers.